Okay, what's up, tycoons? What is up, traders? Super excited for today's video on Illuvium, ticker symbol ILV. We covered the bullish divergence in our last video, suggesting that we could get a strong move to the upside if we held our breakout level of support. We did not break out below it, and rather we held that level and got a very, very strong move off of the bullish divergence. Cryptocurrency has been moving very strong over the past few weeks. So we're going to break down and teach you guys all of the different signals that you can use to spot possible entries and possible exits, as well as go over the major levels that you guys need to be aware of. So if this chart looks intimidating, don't worry, it's actually very simple, and I'm going to break it down for you super simple, okay? So make sure to smash the like button, subscribe to the channel if you guys are new, and we'll go ahead and jump straight into it. The first thing we're going to start off with are these three yellow lines right here we have all over the chart. These are the fib major retracement levels, okay? So the reason you use these is to spot trend continuation or trend reversals. Nothing moves in a straight line up or a straight line down. You get a move up, retracement, continuation higher, or a move down, retracement, continuation lower. This is evident, right? So if you take a look, we had this big move down. We retraced up to our 38.2% retracement level. There's three major levels, okay? The 61.8, the 50%, and the 38.2. These are the three most common and most well-respected retracement levels. There are others, but these are the main ones you want to pay attention to, especially as a beginner. So again, highlighting, we move down, we retrace, and then we continue that trend and head lower. Now, you can also use the fibs to give yourself bullish or bearish price targets, aka support and resistance. So here, we had a breakout level and the fibs gave us some bearish price targets to the downside. Once we broke through that level, we got our trend continuation and we came and we hit our second bearish price target. Right, and we were looking to see if that was going to continue. All right, so we've established what this movement was right here and what these lines are. So now we know what these are. So what we did is we repeated the process. So now we have a new swing high and a new swing low. So we moved down, we retraced up to the 50% retracement level, got rejected, headed lower. But what we did was we found support here. Okay, and then we continued higher. And if you look, we're currently battling our 61.8% retracement level. So, a healthy retracement goes all the way up to the 61.8 before you get that trend continuation. Now, it's useful not only for trend continuation, but for also spotting reversals. If you move down, retrace, consolidate a little bit, and then break through those retracement levels, that's how you spot a potential reversal. So if you look at what we're doing right now, we're currently battling these three major retracement levels and consolidating in there, right? We had the move down, we consolidated a little bit, and it's very possible we could get a breakout to the upside if this momentum continues, all right? So that's how you use the fib retracement levels, and that's why they're so important and why we're looking at them and watching them, okay? A lot of trading is done by algos, about 70%. This is true in the crypto market and the stock market, okay? Whether you believe it or not, whales and big institutions have a lot to do with the price movement, and they're using algos to buy and sell based off of certain signals, and those algos are using mathematical formulas, right? So if you're using the fib retracement tool, it's going to give you, rather than using the naked eye to draw support and resistance levels, it's going to give you some valid support and resistance levels calculated by a mathematical formula, okay? That's why I like to use it a lot. Now, let's take a look at our RSI. This stands for the Relative Strength Index and measures, obviously, the relative strength of a token at its given price. Now, you spot divergences, which that simply means something different is happening on the RSI than what's happening on the price action of the token. So to visualize that for you real quick, you have what's known as a low here, a lower low here, and we have a low and a higher low. This is a term known as bullish divergence when you're making higher lows increasing in relative strength as the price of the token is decreasing. And sure enough, what do you see? You get a nice pop to the upside up to your 50% retracement level before rejecting and heading back down lower. So bullish divergence is something you can use as a possible entry signal. Now, what else can you use is going to be the MACD, okay? And once you start to combine a few things together, then you're going to really give yourself an edge in the market. Trading is like going to battle, going to war. You need to have the proper weapons and know how to use those weapons so you can increase your odds of success on the battlefield. So we established we have a bullish divergence at this point. What else do we have? Well, we know that this is a major support level, aka bearish price target, based on our fibs as well. So now we have bullish divergence. That's number one. Number two, we're at a major support level right here that we came over and hit. Number three is going to be the MACD. We end up getting a bullish entry signal, right? So an entry signal on the MACD is going to be when this blue line crosses above, right? When you see that happening, that's what's known as an entry signal. Okay, so first we get the bullish divergence. Second, we hit our major support level, and then third, after the bullish divergence, because that happens right around here, we get the bounce off of this trend line, and then you see the blue line starting to cross up. Right, we make that move up, and you know that these are the major retracement levels of resistance. You know to set a stop loss or have some type of risk management when you're at these levels in case things end up reversing and continuing that trend, right? That downtrend that we were in. And sure enough, it started to, but look at what we did. We came back down and we made an equal low, right? So we have a low here, and then over here, we have an equal low. So we're not making lower lows, we're making equal lows now, but we're still continuing to build bullish divergence, right? So over here, we have a low, and over here, we have a higher low. So we're holding this initial bullish divergence trend line, still increasing in bullish in strength, in relative strength on the token, as we're making equal lows. So now we have three things come together again once we see the blue line cross above the MACD. And once you have 2, 3, or more signals combined together, it's really going to help give you that confidence that you need to execute more efficiently and, you know, overall increase your odds of success. That's what it is. It's all probability game. And, you know, the more tools you have to increase your, you know, rate of success and give yourself more confidence, then the higher your probability of success is going to be, right? This video isn't financial advice. I'm not telling you guys to buy this. It's about to go to the moon or sell it. It's about to crash. I'm teaching you the different signals that you can use to spot. Even as a beginner, you can start to practice some of these things and learn how to do them yourself. So now that we've established what really caused this rally from a technical standpoint, okay, we need to know what to look out for from a technical standpoint on what could end this rally. All right, so one thing is going to be a MACD sell signal. So just like the buy signal is the blue line crossing above, an exit signal is going to be the blue line crossing below. If you see, we got an exit signal right over here, and then we ended up dropping pretty low afterwards. All right. So, you know, that's something to be cautious of. Now, another thing, we came up and we hit our major retracement level of resistance and we started to head lower. So that's another thing. So when you're rejecting your major retracement levels and heading lower, then we got a MACD sell signal. We ended up pushing down pretty low. But just like there's bullish divergence, there's something also known as bearish divergence on the relative strength index. This is where you're making a high and then a higher high, right? So here we have a high. We have a higher high over here. Clearly the token is in an uptrend and, you know, going up in price, but on our relative strength index, we have a high and we have a lower high. This is what's known as bearish divergence, and an indicator you could see some bearish activity in the future, right? It doesn't mean you have to get a full-on reversal, but it does mean that there's a potential for, you know, some type of a pullback or bearish activity. Now, if you look at our MACD right here, we've got a bunch of question marks here. What is the MACD going to do? Is it going to continue trending upwards, right? If the blue line stays above this orange line right here, then we still have some bullish momentum behind us. But if we get a MACD crossover to the downside, just as we did over here, we could end up getting a sharp move to the downside as we have before. Now, combine that with the fact that we have some bearish divergence and that we're also at our major retracement level of resistance. You know, now we have a few things lining together. And if we get this MACD sell signal, that could be the final confirmation that this rally is potentially over and we're due for some type of a pullback. Now, if we zoom in a little bit, all right, what we're going to see is that we have, just like you have retracement levels of support or of resistance, you have them for support as well. So what we're looking at is going to be precisely that, our three major retracement levels of support. We've had the sharp move to the upside. If we pull back, it's going to be perfectly healthy and a healthy retracement to either one of these three levels, 55.94, 52.52, and 49.09. If we do get some type of a pullback due to the bearish divergence, or due to us, you know, rejecting our retracement level up here of resistance, we can pull back and it still would be a healthy consolidation for a possible trend continuation. Now, if we come up here, pull back, and we start to consolidate a little bit, or we get that MACD sell signal, you know, there's a chance that we could break through these levels and get the reversal, right? So we're looking for a larger term on a larger scale, right? On a longer trend, we're looking to get the reversal up here. But on a shorter trend, we're looking to make sure we don't get a reversal back down. Okay, so pay close attention to these levels of support. If we do get any type of a pullback, this is where you really want to consolidate and find support and push back up higher. So that's everything that needs to happen for us to continue bullishness. And those are the signals to look at for a possible reversal back to the downside. Now, if we continue this bullishness, okay, we have some price targets up here to the upside. All right, our breakout level is going to be right here at 82.49. Let's just call it 82.50. And the reason for that, okay, is because that's our previous high. So we've established that we're in a downtrend, right? We're making a high, a lower high, a lower high. Well, if you take a look on a smaller time basis, we have a high here, we have a higher high. So we are starting a little bit of a reversal on a smaller scale, right? We have a high here, a higher high. We want to come up here and make another higher high. So that way we have 3 higher highs. And if we do get a pullback, again, we want to create a higher low. We have a low here, a higher low. If we get another pullback, we want to continue making higher lows. So that way we can continue this uptrend and really zigzag our way up here to our overhead supply zone. But 82.50 is going to be your breakout level because that's where our previous high is above our most recent high that we just broke out of. So if we are able to break out past 82.50, all right, we do have some bullish price targets up here of 92.30, 98.337, and also 106.007. But there's a lot of work that needs to be done, okay? Specifically, we need to make it through this supply zone. If you're not familiar with supply zones, it's similar to support and resistance, but a supply zone is actually going to be a range rather than just one specific number, like here at 82.50. As you can see, we consolidated in this area, but there was an imbalance of sell orders that ultimately pushed us lower. And then we rose back up into this area, but there's still an imbalance of sell orders. What that means is that there's either a large amount of market sell orders or limit sell orders in this area, and we've continuously had an imbalance, meaning that there's more sell orders in this range and in this zone than there is buy orders. And if that happens, price moves down. That's how these markets work. So we've established we do have a supply zone here we need to be cautious of, and heading up into. So specifically, the zone is going to be from about 73, okay, all the way up to 82.50. That's our supply zone. And what we want to see is we want to see the market able to eat up all of those sell orders, any remaining sell orders in here that have caused an imbalance. And we want to see those sell orders become less than the amount of buy orders. If that happens, then we're now going to create an imbalance of demand. And that demand, that pressure, that buying pressure can push us up to our bullish price targets. Okay, so, that's everything. That's a complete breakdown of Illuvium, ticker symbol ILV. We know our major support levels we need to hold to go higher. We know where to be cautious at up here in our supply zone if we do continue going higher. We know that this is an area of imbalance where there's been lots of sell orders. If we're able to flip that area of imbalance from supply to demand, we could push up to these 3 bullish price targets above. Now, if we break through our major retracement levels of support, we could get some type of a reversal and possibly head back down to $38 on ILV, which would be our previous, really big support level right here. We know that we have some bearish divergence we need to be cautious of, and we need to be cautious if the MACD line crosses below that orange line. That could be a possible exit signal, spotting the reversal. So pay close attention to all of those. Hopefully you enjoyed the video and you learned something new. If you did, smash the like button, subscribe to the channel so you guys don't miss anything. And I also do viewer requests every week. So if you like this video and you want to see your crypto, your token in the next video, all you got to do is comment down below and I'll make a video on it for you as soon as possible. I really appreciate you making it this far in the video. And if you did, I think you'll enjoy one of these next 2 videos as well. So make sure to click on that.